Hello and welcome back to the Morning Report Charts Appraisals on Thursday the 27th of November with me, Richard Perry, market analyst at Tech Markets. Moving on to dollar yen now, and on the daily chart, well, this drift lower or consolidation, however you would like to call it, continues. We've had two confirmed bearish days, two red candles, and that is the first time we've seen that, since, I suppose, late October, but in reality, the last time we saw a sequence of bearish candles was in the big correction. So the first time within this rally, in this run higher, that we've seen this sort of sequence of bearish candles, in my opinion. So that has happened, and it's also happening with the instance of deteriorating momentum. MACD lines are crossing over, and you would imagine now if dollar yen does close lower today, that crossover, which is on it's a fluid situation in the fact that if dollar yen closes higher today, you'd probably see that crossover not happen. But at the moment, as things stand on an intraday basis, halfway through the trading day, there is a crossover on the MACD lines, and that is a negative signal. The stochastics are also crossing over as well, to confirm a bearish a near-term correction, and that would suggest also, I'll mention it as well, the RSI is 71 at the moment, close to coming below 70. Again, that would be a near-term bearish signal. So these momentum signals are racking up at the moment, and on the intraday chart, I've been talking about 117.33 for a while, and that has been breached on an intraday basis. The support of 117 figure, which is this blue line here, has not yet been breached. So it's I'm not getting too worked up yet about this being a corrective move, but if it starts to trade with a 116 handle, I think that dollar yen may gather a little bit more momentum to the downside, and then the next support comes in at 16.34 before the 115.44 key reaction low within the uptrend. So that would be the first real test. 115.44 would be that first real test within the downtrend, within the uptrend. So that is what we're seeing at the moment, but this consolidation is just breached that 117.33 level, but not on a convincing basis yet, because it's rebounded back above. But I think 117, if we see a 116 handle, then we're sort of looking out for a bit more of a correction, but at the moment it's not yet been confirmed. You'd be looking at probably a move above 117.90, I suppose, as your initial sort of test of resistance, but certainly the key resistance near term, 118.57 before the 118.96 key high. But the interesting thing also from this basis is the fact that the intraday hourly moving averages have rolled over and started to sort of now fall. So that is again a bit of a disappointing outcome, I suppose, for the bulls. But this correction could well continue as a drift. It could also be sort of going back on what we saw back in August, September. We saw the strong on higher. I talked about this rolling over and sort of buying into a correction. We saw a correction probably go a little bit further than I expected in October, but ultimately then proved to be a great buying opportunity. That could well be what we're seeing at the moment, because I still think there is further legs to the upside on this dollar yen chart, but this run, this drift lower that we're seeing at the moment could well just continue for the time being. You may well see, ultimately, this is looking on the daily chart back towards the 100% Fibonacci level, 113.80, but that's getting a little bit ahead of ourselves. Let's not get too worked up about this correction quite yet. We're still above 117, which is the big support near term, and whilst that happens, then I think we've got to still see this as just a mere consolidation. So I wish you good luck in your trading on your dollar yen today, and I'll speak to you later. Thank you.